This is an urgent transmission. I need you to cease what you are executing, set aside your device, and listen to me with extreme attention. The parameters of the situation just shifted while you were consuming your evening meal. It is Sunday night, January 26, 2025, and while the corporate media is occupied discussing athletic competitions and celebrity gossip, the detonator has been activated on an economic explosive that is planted directly in the heart of Washington, D.C. We are no longer analyzing a pullback. We are no longer analyzing a decline. We are analyzing a timer that is pulsing crimson. We are precisely 6 days distant from a complete system freeze. Ladies and gentlemen, Prime Capital speaking. This afternoon at 2:14 p.m. Eastern Standard Time, President Trump delivered a statement that has essentially paralyzed every risk analyst on Wall Street. It was not a bargaining maneuver. It was not a gentle suggestion. It was a proclamation of combat on the spending process. The statement was brief, merciless, and frighteningly explicit. Government shutdown in 6 days. The swamp is insolvent. No agreement until America is prioritized. Now, I understand precisely what you are considering. You are sitting there considering Prime Capital seriously. We have experienced this situation before. We experienced it in 2018. We experienced it in 2023. It is political drama. They yell, they argue, they shut down the federal parks for a few days, and then they manufacture the money, and everyone returns to duty. It is just static. If that is what you are considering, you are committing the most perilous error of your economic life, because this is not 2018. In 2018, inflation was 2%. The debt was 20 trillion. The world was at stability. This is 2025. Inflation is operating elevated. The debt is 38 trillion. The geopolitical structure is disintegrating. And most critically, the outcome of this shutdown is fundamentally different from anything we have ever encountered. This is not just about securing the entrances to government buildings. This is about eliminating the vision of the captain of the vessel in the center of a tempest. We are confronting an information embargo. You have to understand how the contemporary financial apparatus actually functions. It is not operated by individuals sitting in a chamber making instinctive choices. It is operated by algorithms. It is operated by enormous supercomputers at BlackRock, at Vanguard, and at the Federal Reserve. These machines digest data like air. They need the Consumer Price Index (CPI) to calculate inflation. They need the non-farm payrolls to calculate employment. They need the PCE deflator to calculate consumer expenditure. These figures are the navigation that the captains utilize to steer the global economy. Every interest rate choice, every bond yield, every stock transaction is computed based on the anticipation of this data. But here is the catastrophic scenario. If the government shuts down on Friday night at midnight, the illumination extinguishes at the data bureaus. The Bureau of Labor Statistics, BLS, the people who report if inflation is destroying us, closes its facilities. The Bureau of Economic Analysis, BEA, the people who report if we are in a recession, sends its employees residence. The platform goes dark. The publications are terminated. There will be no inflation publication next week. There will be no employment figures. The navigation screen goes completely dark. Now, imagine you are Jerome Powell. Imagine you are the chairman of the Federal Reserve. You are already losing control of the bond market. Yields are climbing. The banking institutions are trembling. And suddenly you are informed that you have to steer the vessel for the next 3 weeks with zero gauges. You do not know if inflation is climbing or declining. You do not know if unemployment is increasing. You are steering blind in the mist. What do you execute? Do you remain motionless and do nothing? That is hazardous. Do you raise interest rates and risk destroying the economy when you cannot observe the instruments? That is catastrophe. No. When a central bank steers blind, they default to their most primitive institutional instinct, terror. And the only instrument they possess to calm their terror, the only button on the control panel that functions when their navigation is extinguished, is the printer. The market understands this, the hedge funds understand this, the sovereign wealth funds in Dubai and Singapore understand this. They understand that an information embargo forces the Fed into a protective posture. It forces them to saturate the system with liquidity just in case. They cannot risk a deflationary liquidity collapse when they do not possess the data to monitor it. So they will print. They will inject reserves. They will initiate a precautionary print to maintain the mechanisms lubricated while the government is shuttered. They will choose inflation over chaos every single time. This is why you are witnessing gold reaching a new all-time summit tonight. This is why you are witnessing silver shattering through $100 and refusing to descend. The market is not waiting for the shutdown to actually occur. The market is anticipating the unavoidable response. The institutional money is purchasing the anti-dollar now because they understand that by next week the dollar is going to be weakened by a terrified Federal Reserve attempting to steer a political catastrophe. They are purchasing the protection before the structure ignites. They are abandoning the currency that relies on politicians and purchasing the money that relies on physics. And the timing could not be worse. We are not entering this shutdown in a period of tranquility. We are entering it in a period of extreme vulnerability. The repo market, The foundation of the financial system is already displaying signs of strain. The reverse repo facility is exhausted. The cash buffer is vanished. A shutdown now is like removing the support from beneath a man with a broken leg. It ensures a collapse. And to make matters worse, this political conflict is not just about budgets and deficits. It has become personal. It has become brutal. While Washington debates about figures, something disastrous has occurred in the streets of the Midwest, something that has converted this financial dispute into a social conflict. We need to address the trigger. We need to address the reason why the Democrats in the Senate are promising to burn the funding bill to ashes rather than negotiate. This is where the story stops being about figures on a document and starts being about flames in the streets. We have addressed the information embargo. We have addressed the Federal Reserve steering blind. But you cannot understand why this government shutdown is unavoidable. You cannot understand why the politicians are declining to approve the deal until you examine what is occurring on the ground in the American Midwest. While the algorithms are watching the bond yields, the rest of the country is watching a disaster unfold in real time. We need to address Minneapolis. For the previous 48 hours, intelligence has been streaming into our research desk regarding a significant escalation of force involving federal operatives. We are not addressing local police. We are addressing federal assets, ICE, Border Patrol, and federal marshals being dispatched to domestic operations, and late last night the situation went from tense to disastrous. We possess confirmed intelligence of a second incident involving these federal operatives in less than 3 days, but this time the story is different. This time the casualty was not a suspect. The casualty was not armed. The casualty has been identified as a 34-year-old ICU nurse, a woman who spent the previous few years saving lives in a local hospital, a woman who was simply walking home from a 12-hour shift when she encountered a federal patrol. The specifics are still emerging, but the response is already explosive. Footage of the incident are spreading on social media, unfiltered and viral. The public fury is not just anger. It is a visceral, collective roar. People are witnessing a healthcare champion, someone who represents the very best of the community, terminated by the very government that is claiming to defend them. This has triggered a surge of demonstrations that is spreading faster than the intelligence itself. Minneapolis is ablaze. The streets are filled with thousands of people. The National Guard is being activated. We are witnessing the early phases of a social explosion. And this is the trigger that destroys the budget deal. You have to understand the political calculation in Washington. Yesterday, there was a slight chance that the Democrats and Republicans might negotiate a deal to keep the government functioning for another month. Today, that chance is zero. The Senate Democrats have already emerged and established a boundary in the sand. They are promising to block any funding bill that includes capital for these federal operations. They are stating, "We will not approve a check that pays for the ammunition used to terminate nurses." The political cost of negotiation has become too high. If a Democrat votes for this bill now, their career is finished. If a Republican votes to defund the operatives, their base will revolt. It is a gridlock. It is a standoff written in blood. So, the shutdown is no longer a possibility. It is a guarantee. The government will close on Friday because the two sides are no longer debating about capital. They are debating about morality. They are debating about justice. And when politics becomes passionate, reason evacuates the room. This ensures the information embargo. It ensures the Federal Reserve will be abandoned alone in the darkness. But examine what this executes to the mentality of the market. Markets despise uncertainty, but they fear disorder. When you combine a financial collapse, the liquidity freeze with social disorder in Minneapolis, you acquire the perfect tempest for precious metals. Investors examine the display and observe the banking institutions collapsing. They examine out the window and observe the cities ablaze. Where do they position their capital? Do they purchase stocks in corporations whose locations are being destroyed? No. Do they purchase bonds from a government that is terminating its own citizens? No. They purchase the only thing that is impartial. They purchase the only thing that is tangible. They purchase gold. They purchase silver. This is why the markups on physical metal are detonating right now. People are not purchasing silver to generate a return. They are purchasing it to acquire protection. They are purchasing it because they realize that the system is fracturing on every dimension, financial, political, and social. The confidence is destroyed. And when confidence vanishes, capital velocity increases. People escape from the currency and into the commodity. This brings us to the most disturbing signal on the technical graphs. We are witnessing a collapse in the time to travel. The price of silver is not just climbing upward, it is accelerating. It is moving faster than it has ever moved before. We need to analyze the velocity signal. We need to demonstrate the calculations that suggest $110 is just days away. If the social disorder in Minneapolis is the flame, then the price action we are witnessing on the graphs is the detonation. I need you to stop examining the price level and start examining the velocity. Because in financial markets, velocity is everything. Velocity reports the power of the movement. Velocity reports if it is a trade or a stampede. And right now, the velocity of silver is reporting that the dam has completely fractured. We are monitoring a metric identified as time to travel. This calculates how many days it requires for silver to move $10 in price. And the information is absolutely horrifying for the short sellers. The time intervals are diminishing, the locomotive is accelerating. Let us examine the history of this surge. When silver moved from $20 to $30, it was a battle. It was a fight. It required 145 days. The banking institutions resisted every increment. The algorithms shorted every advance. It was a grind. Then when we moved from $40 to $50, circumstances started to quicken. That movement required 39 days. The opposition was diminishing, the shorts were getting depleted, but examine what just occurred. Examine the movement from $70 to $80. It required 6 days, and the movement from $90 to $100, which should have been the most challenging psychological obstacle in history, it required just 10 days. Do you observe the sequence? 145 days, 39 days, 6 days, 10 days. This is an exponential decay in opposition. It signifies the sellers are vanished. It signifies the algorithmic restriction. The computer programs engineered to limit the price has shattered. The machine that typically declares liquidate at resistance levels has been overwhelmed by a wave of physical purchasing. We are now in the vertical stage. This is the portion of the graph where physics assumes authority. It is like a rocket escaping the atmosphere. The higher it climbs, the less opposition there exists, and the faster it accelerates. Based on this velocity, based on the pure momentum of the previous 2 weeks, my research is screaming a warning. We are not stopping at $100. If the government shutdown hits on Friday and the information embargo terror establishes in, we are going to cut through the next levels like a heated blade through butter. The opposition between 100 and 110 is non-existent. Why? Because nobody has ever traded there before. There is no memory of price at these levels. It is open sky. I am forecasting that we could witness $110 by next weekend. That is a $10 movement in 5 days. It is entirely consistent with the velocity pattern we are witnessing, and here is the crucial point. Typically, when an asset climbs vertical, you anticipate a retreat. You anticipate a reversal. But silver is unique. Silver is a Giffen, good in a catastrophe. A Giffen good is a peculiar economic phenomenon where demand actually increases as the price climbs. Why? Because people witness the price climbing and they think, my God, the currency is dying. The higher the price climbs, the more terror it creates and the more people purchase. It is a feedback circuit. At $100, people are more frantic to purchase silver than they were at $20. At $20, it was an investment. At $100, it is existence. The mentality has shifted from greed to terror, and terror is a substantially stronger motivator. So do not examine the graph and think it is overextended. Overextended is a term for standard markets. In a currency breakdown, nothing is ever overextended until the currency is extinguished. We are witnessing the death of the opposition. But while the price of silver is detonating, there is a dark cloud forming beneath the surface of the banking apparatus. There is a technical signal, a warning indicator on the dashboard of the foundation that suggests the stock market is about to experience a cardiac arrest. While silver soars, liquidity is solidifying, and we need to address the liquidity death divergence. We need to clarify the divergence between SOFR and IORB and why it is about to destroy your retirement portfolio. This is the portion of the transmission where the casual viewers escape and the serious investors generate their wealth. I need you to put down the price graph for a moment and accompany me into the machinery room of the financial apparatus. Because while everyone is staring at the decorative exterior on the vehicle, the stock prices, and the silver bars, the oil pressure in the machinery is descending to zero. We are witnessing a technical signal that has predicted every major market destruction of the previous decade. It is a signal that is pulsing crimson for the first time since March 2020. We identify it as the liquidity death divergence. You need to understand two acronyms that operate the world. The first is SOFR, the Secured Overnight Financing Rate. This is the cost of genuine capital. It is what banking institutions and hedge funds charge each other to borrow cash overnight utilizing U.S. Treasuries as security. It is the pulse of the private market. The second is IORB, the interest on reserve balances. This is the artificial capital rate. It is the payment that the Federal Reserve pays the commercial banking institutions to keep their cash sitting idle at the Fed. In a healthy, functioning world, these two figures synchronize. They move together. If the Fed pays 5%, the private market charges 5%. The divergence should be zero. But right now, the divergence is widening. We are witnessing so far the private rate spike significantly higher than the IORB. Do you understand what that signifies? It signifies that private banking institutions are stating, I do not care what the Fed states. I do not care about the official rate. I am frightened to lend you capital. It signifies that cash is becoming scarce in the genuine economy, even while the Fed claims there is plenty of it. The banking institutions are accumulating liquidity. They are refusing to lend to the repo market. They are examining the approaching government shutdown. They are examining the disorder in Minneapolis, and they are stating the security is questionable. This is the catastrophic scenario. The entire stock market, the S&P 500, the NASDAQ, the AI expansion is constructed on leverage. It is constructed on inexpensive overnight borrowing. When SOFR increases, that leverage becomes costly. When the divergence expands, it is like removing the oxygen out of the chamber. The hedge funds receive a tap on the shoulder. It is the margin clerk. He states the cost of borrowing just doubled. You need to liquidate your stocks to raise cash. This is what generates a liquidity catastrophe. Stocks do not destroy because corporations are failing. They destroy because the traders exhaust cash to maintain their positions. We witnessed this in 2008. We witnessed it in 2020. And we are witnessing the exact identical setup right now, just 6 days before the government switches off the illumination. But here is where it becomes fascinating for you. The accumulator. In a liquidity collapse, almost every asset gets liquidated. Stocks get liquidated, bonds get liquidated, Bitcoin gets liquidated. Everything that possesses counterparty risk, everything that depends on another human being fulfilling a commitment, gets abandoned for cash. But there is one asset class that functions as the ultimate security. There is one asset that possesses zero counterparty risk: physical gold and silver. When the banking institutions stop trusting each other, when JP Morgan will not lend Citibank because they do not trust the Treasury security, they will still accept gold. They will still accept silver because metal does not require a credit assessment. Metal does not require a government to remain functional. Metal just exists. This is why we are witnessing this separation. Typically in a destruction, everything descends together at first, but this time silver is climbing while the liquidity evaporates. This reports that the market has already identified the champion. The market understands that when the information embargo hits and the liquidity collapse strikes on Friday, the only secure location to hide is outside the banking apparatus. The liquidity death divergence is not a warning for silver. It is propellant for silver. It is the signal that the paper apparatus is seizing and the physical apparatus is assuming authority. So observe this divergence tomorrow morning. Observe the repo rates. If you observe silver climb by 5 or 10 basis points while the Fed executes nothing, you understand the collapse has initiated. You understand the cardiac arrest is occurring. And this brings us to tomorrow. Monday morning is going to be a disaster for the unprepared and a fortune for the strategic. We possess the Trump statement. We possess the Minneapolis demonstrations. We possess the liquidity warning. The algorithm is going to respond aggressively at the opening. I have executed the calculations, and I possess a very specific set of forecasts for what you are going to witness when the bell rings on Monday, January 27th. This brings us to the most immediate and actionable portion of this transmission. We have examined the macro picture, we have examined the foundation, but you need to understand what is going to occur when you awaken tomorrow morning. You need to understand how to navigate the first trading session of the most hazardous week in financial history. Based on the convergence of the Trump statement, the Minneapolis demonstrations, and the liquidity collapse, the algorithms are primed for aggression. Here is my forecast for Monday, January 27th. First, examine the East. Before New York even pours its first cup of coffee, the Asian markets are going to establish the atmosphere, and I am forecasting a significant gap upward in the price of silver at the Asian opening. You have to understand that the markets have been shuttered for 48 hours while the world has been ablaze. Orders have been accumulating in the apparatus all weekend. Hedge funds in Singapore, family offices in Hong Kong, and traders in Sydney have been examining the headlines. They witnessed the shutdown, they witnessed the incident, and they are terror purchasing at the market opening price. This creates a gap. The price will likely not open at $100. It will likely open at 102s or 103. It will jump. If you are waiting to purchase at Friday's close, you're going to be disappointed that price has vanished. The locomotive has escaped the platform. Second, observe the VIX. The volatility index, the terror gauge of Wall Street, has been suspiciously calm lately. It has been controlled and compressed. But tomorrow, the 6-day countdown to the shutdown officially initiates. The reality of the information embargo is going to hit the risk analysts on Wall Street like a cold bucket of water. I anticipate the VIX to detonate higher. When the VIX increases, algorithms automatically liquidate stocks. It is a mechanical response. So anticipate the S&P 500 and the NASDAQ to open deep in the crimson. This is the risk-off trade initiating. Capital is escaping the uncertainty of the stock market and rushing to the certainty of the metal market. But here is the most important warning I can provide you for tomorrow. Be cautious of the deception. Be cautious of the snare. Often on a Monday morning with this magnitude of negative intelligence, the manipulators, the banking syndicate we address, will attempt one final desperate effort to crush the price. They might dump $1 billion of paper at 8:30 a.m. to attempt and trigger stop losses. You might witness the price descend from 103 back down to 100. Do not be fooled. Do not liquidate. Every single descent in the previous 2 weeks has been purchased aggressively within hours. The velocity information we addressed proves that the buyers are ravenous. They are waiting for a reduction. If you witness a crimson candle tomorrow morning, it is not a destruction. It is a present. It is the final opportunity to climb on the rocket before it clears the tower. The underlying fundamentals, the shutdown, the demonstrations, the fractured foundation, are too powerful for any manipulation to persist for long. So the approach for Monday is simple. Anticipate volatility. Anticipate the displays to flash crimson and emerald, but maintain your eyes on the target. The liquidity death divergence is expanding, the information embargo is approaching, the apparatus is collapsing, and the exit entrances are closing. This leads us to the final conclusion. This leads us to the only determination that generates sense in a world gone insane. We need to conclude this and provide you your directions for the week. So here's the conclusion. We have presented the intelligence. We have demonstrated the embargo threat of the government shutting down in 6 days. We have demonstrated the trigger of social disorder ablaze in the streets of Minneapolis. And we have demonstrated the liquidity death divergence that is silently screaming from the machinery room of the banking apparatus. The proof is overwhelming. We are not examining a random collection of negative intelligence. We are examining a convergence. We are examining 3 enormous hurricanes, political, social, and financial, colliding into each other at the exact identical moment, and positioned right in the center of that tempest, perfectly positioned to absorb the escape of capital, is silver. This brings me to the most important guidance I can provide you for the week ahead. You are going to witness circumstances this week that will test your determination. You are going to witness volatility that makes the previous year appear like a rest. There will be moments, perhaps tomorrow morning, perhaps on Wednesday, where the price of silver might descend $5 in 5 minutes. You might witness a crimson candle that appears like a cascade, and the voice in your mind, the voice of terror that the apparatus has planted there, is going to roar, "Liquidate, accept the return, escape before it destroys." Do not listen to that voice. That descent is artificial. That descent is a bear snare engineered to remove your position precisely 1 second before the genuine movement initiates. You have to remember the velocity information we addressed. The market moved from $90 to $100 in just 10 days. That category of momentum does not reverse on a moment. That is the momentum of a cargo train. The buyers are hostile. The sovereign wealth funds are ravenous. If the price descends, it is exclusively because a desperate banking institution is attempting to cover its short position before the illumination extinguishes on Friday. They are attempting to remove you so they can accept your position on the rescue boat. Do not provide it to them. You have to understand the strategy theory of the next 6 days. As we acquire closer to Friday, the terror is going to intensify. On Monday, the market will worry. On Wednesday, the market will stampede. By Friday afternoon, if there is no deal, and with Minneapolis ablaze, there will be no deal. The market will enter full liquidation mode. Stocks will be liquidated, bonds will be liquidated, and that capital has to migrate somewhere. It cannot migrate to cash because the Fed is about to print trillions into the blind void of the information embargo. It has to migrate to hard commodities. It has to migrate to the only thing that does not require a government bureau to possess worth. We are examining a target of $110 by next weekend. But even that is just a milestone. In a genuine liquidity collapse where the counterparty confidence evaporates, silver does not just climb to 110. It climbs to no offer. It climbs to a location where you cannot purchase it for any quantity of paper capital. We are acquiring dangerously proximate to that boundary. So prepare yourself. Verify your positions. Verify your physical accumulation. Switch off the interference of the mainstream media because they will fool you until the very conclusion. They will report the shutdown is temporary. They will report the demonstrations are controlled. They are lying. The apparatus is shattering. The divergence is expanding. The velocity is vertical. The only secure location is to maintain your position. Let the traders trade. Let the gamblers gamble. You are not a trader. You are an owner. And this week, the owners triumph. This is prime capital. The countdown is at 6 days. The embargo is approaching.